Hello, everybody, and welcome to our next and final session of this conference. I'm delighted to be here. My name is Simon Hopkins. I'm the Chief Executive of Milltrust International in Singapore. We are a manager of public equities through our award-winning Global Emerging Markets program. We're possibly best known for our focus on climate impact. We run with our colleagues in Hong Kong the Climate Impact Asia Fund, which invests into those companies in Asia which are driving the move to net zero and embracing decarbonization. But I'm also here today with my friend Cristina Gabaldon from Manila. She works for Sun Life, and in a moment I'm going to invite her to tell us a little bit about her perspective on where we should be making money in Asia and what the trends are across those Southeast Asian markets. I'm going to start by just framing this session from a slightly different perspective, and that is from the wealth management perspective. Now, would you, I think I can manipulate these slides myself. There we are, wonderful. So my point really today in the few minutes that we have with you is to emphasize that Southeast Asia is not an institutional investment management market. There isn't a great deal of institutional investment management. There are very few financial products, but what there is a hugely fast-growing and burgeoning wealth management industry. In fact, Asia Pacific is one of the fastest growing wealth management markets in the world, forecast to grow by a third between 2021 and 2025. And that is considerably faster than the global growth of the ultra high net worth population. The numbers of billionaires and millionaires in APAC is set to rise by almost 50% in terms of billionaires and 40% in terms of millionaires. And the region already boasts more billionaires than any other region in the world. Obviously, China is included in that, but much money is now moving through the whole region, and particularly in the context of the sad demise of Hong Kong. Why is that? And what is the opportunity that we're seeing? Well, in Southeast Asia, and I'm sure Cristina will touch on this, we are seeing the shift up the typical consumer chart from the kind of consumables that people buy when they're first getting onto the wealth ladder. People have televisions, mobile phones, cars, then they have the aspiration to own their own home. And after that, they start to buy insurance products, stocks and bonds, and they seek wealth management services. There's also some other significant characteristics of this part of the world. Much of the money that is controlled by families within Southeast Asia is family-owned businesses. These businesses are currently going through intergenerational transfers from the old patriarchs that founded and established these companies to a new generation, often called the next generation, of people who've had very different lives. They've traveled around the world, they've sought education in the West and in different parts of the globe, and they've come back with a very different perspective on how to invest. They have different mindsets, and they have increased sophistication and appetite for wealth management solutions, which is why in places like Singapore, where I reside, the growth in wealth management has been quite extraordinary over the course of the last decade. The ongoing demise of Hong Kong, which I mentioned a moment ago, is obviously very favorable for the very attractive landscape in Singapore, which has world-class regulatory framework, which has a legal, financial, and safe custody framework, which is second to none. But also, Singapore is a hotbed of innovation and has a government which is highly supportive of this aspect of the new economy. Asia as a whole is one of the leading innovators in strategies to combat climate change, with leaders in alternative power, waste to energy, electric batteries, electric vehicles, battery storage technology, alternative proteins, and so forth. And again, this is an important area of growth that we're seeing for investors in the region. The challenges, as I see it, and this is a presentation or a session which is equally about challenge, is the possibility that Singapore will have to make choices. These are choices that face every nation in Southeast Asia, with the growth and development of China as a world power and as potentially the largest economy in the world. China is influential, exerts influence across the whole region, and that is a delicate balance, a delicate course that Singapore needs to manage given its historical associations with the United States and the Western world. There is a rush to become innovative, ahead of the curve. This can also create risks. We hear a lot about crypto. Everybody is keen to establish cryptocurrency trading hubs. And I think also in the changing global scene with geopolitical challenges and changing perceptions of different regimes around the world, it is sometimes difficult to determine whose money one can acceptably harbor and manage in a very changing international landscape. So I'm going to now hand over to my colleague, Cristina. Cristina, welcome. Nice to see you there.
Hi, Simon.
And how are you today?
I'm good.
Excellent. I think your perspective as an equity fund manager will be very valuable today. And I'd like to ask you what opportunities you're seeing in ASEAN today.
Okay, I can share my screen. Actually, opportunities I'm seeing could be dissected into short term and medium term. ASEAN MSCI right now is looking fairly valued, trading at 17 times PE multiple. Mean for the past 5 years is around 16.3 times. So not much you can make out of that. But in terms of individual countries, there are pockets of opportunities there. For instance, Philippines is trading at attractive valuation at 15 times. You might call me biased because I'm from the Philippines, but anyway, short-term opportunities would be, I would play it via those that would benefit from reopening, maybe a tourism angle to it, and banks in general would benefit with higher asset yields, NIM expansion, and credit costs coming off because we're recovering from the pandemic. But on medium term opportunities, I see that there are opportunities in the FDI space. If you look at the foreign direct investment regulatory restrictiveness index in 2020, Philippines and Indonesia and the other countries in ASEAN is there, but um, there are changes being made. For Indonesia, for example, there is the omnibus law reforms that was passed in 2020, and this is positive for foreign investments. For Philippines specific, retail FDI rules have been loosened, and the minimum paid up capital, for instance, has been reduced. Also, there are amendments to the Foreign Investment Act that change the requirement of employees that need to be hired to set up shop. And there is an amendment to the Public Service Act wherein full foreign ownership of public service like telcos, airlines, domestic shipping, and railways is now allowed. Also, if you look at the on the manufacturing wage, the monthly base salary for ASEAN is quite attractive, lower than that of China. And then if you look at ASEAN demographics, you would see in the top 15 countries in the world in terms of population, Indonesia is there, Philippines is there, Vietnam is there, and the median age is quite low versus the rest. If you look at the right hand chart in the change in working age 15 to 64 population from 2015 to 2025, you can see there the double digit changes. So Philippines is there, Malaysia is there, Indonesia and Myanmar, and Vietnam as well, mid single digit of growth. So in terms of what's going on in the world with all the geopolitical tensions that could intensify, there's that need for multinational corporations to diversify their supply chains, and ASEAN is seen to benefit from this. You see the demographics, the wages, and reforms being made.
Yeah, it looks like Southeast Asia's story, the consumer story of a young and fast-growing population is still very much intact. But obviously, we've had a horrible 2 years. Some people at the bottom of the pile have really suffered as a consequence of COVID. Supply chains have slowed down economic activity. China is only, of course, just coming out of some really tough restrictions, which seem to have gone beyond what anybody else had imposed. But I guess we've got that behind us now, and we're hoping to see significant recovery. I think if you look at the valuation of China and some of the other markets, the valuation suggests that these economies are going to implode. They really are presenting a historical opportunity to come back and buy stocks at much lower valuations in many cases. I think also the political shifts across the region are quite important, Cristina. I was going to ask you specifically about the Philippines and your recent election of Bongbong Marcos and what that means for the Philippines economy. Of course, you've got the potential for a change also in Thailand, which could be very positive for the resurgence of the consumer story and the investability of Thailand as an important economy. Do you want to comment on the Philippines specifically from a political standpoint?
Well, I would say Bongbong Marcos was the popular choice among the masses, and I would say democracy won in this country. Bongbong Marcos has a strong support. He has Congress and the Senate to back him up, and he can really push for reforms. As to the economic team, the market views it as continuity of the past administration's policies. So that's how things are with the Philippines, although we're very much waiting for how things will shape up.
Yes, I guess the tilt towards China will continue by all accounts, and that's probably pretty positive for the story in the Philippines. So what sort of challenges do you see going forward in ASEAN, Cristina? And what sort of emerging trends are you seeing in ASEAN? Perhaps we could wrap up by sort of looking at both of these two important points.
Okay. For challenges being faced by ASEAN, we see inflation picking up. Higher rates are expected. There are concerns of weaker currencies, but Indonesia could be an exception to that. They're benefiting from higher commodity prices. Exporting countries, I would say, are more defensive in this environment. Um, Purchasing power of consumers should be affected by what's going on. We expect a lot of central bank foreign exchange interventions. They'll probably use up some of their dollar reserves here. Um, because of high inflation, there could be some subsidies on some goods. And there's going to be this protectionism issue wherein you saw that with the export ban of palm oil and chicken, for instance. So those are the challenges we're seeing right now, and could pick up some more.
Yes, what about emerging trends? Where do you think one could specifically be looking at investments? What about financial services in the context of what I described as the significant flows of money in the wealth management arena, particularly into big organizations like yours that are growing very fast in places like the Philippines?
Okay, so like actually, your earlier deck on your view of high net worth and how billionaires and millionaires in Asia are growing, the trend I'm seeing is that there's going to be more family offices that's going to be set up, wherein the needs of the family are sort of customized. Product pushing by, let's say, financial institutions won't be the in thing now. So these high net worth and ultra high net worth would be looking at, some succession planning or even citizenship planning, diversification asset, and they want family offices because of the confidentiality that this brings. And with the rise in incomes, it's good for asset management companies. It's an opportunity for retail investors to invest in mutual funds. Financial literacy is expected to pick up as well in relation to that.
Yes, I think what we're hoping is that there will be a shift in the mentality of wealthy families away from looking at the traditional stores of value and easy money opportunities as rentiers in the economy, owners of large scale real estate portfolios, and more money coming into the creative industries and new businesses. And I think, as you say, the family offices are increasingly geared towards this kind of investment. And new types of structures here in Singapore, like the variable capital company, which is a recent innovation in the financial landscape, are giving investors an opportunity to access businesses, run portfolios more dynamically, invest into venture capital, which was almost non-existent when I arrived here in Singapore 12 years ago, but is now a very important part of the economy. And you hear announcements regularly, very supportive announcements from government and government-linked companies to encourage investment into this space. So I think we're probably at the end of our session, and it's the end of the day for everybody. It's been lovely seeing you again, Cristina. And
Likewise.
I'd like to thank our audience.
Thanks, everyone.
Thank you very much. Thank
Thanks,
you.
Simon. Bye.
Thank you.